Hey, what's happening, everybody? This is Jerry. It's coming to you live today with a quick daily money clip. And I want to answer a question that actually had a client ask me, and I thought it would be good for us to cover it together. And that question is, when do I buy gold? When do I buy silver? Okay. So if you're not sure what I mean by that, gold and silver referring to precious metals, physical bars, rounds of actual gold and actual silver. So we're not talking about stocks or paper certificates. This is the real thing. So when do I buy which one and what is the purpose of each one? And that's actually the real question here that I want to cover. So I'm going to share my screen really quick and I want to go over how we go about figuring that out. So first thing is we've got gold, right? And I want to answer the question of what is the purpose of investing in gold? Okay. So for me, the purpose of investing in gold is getting out of US currency. Okay. So I'm out of US currency. I am retaining my value. Retain value. Okay. And value and price are two different things. So if I'm retaining value, that's going to be different than focusing on my price, right? So I'm retaining value. I'm getting consistent returns. Gold is a much more consistent asset, right? I'm outpacing inflation. And for me, this is a big one. I'm actually mimicking central banks. Mimicking central banks. So that is why I would invest in gold. So I want to be out of the US currency. I don't want US dollars. Those go down in value every year and they're fake. I want to retain value. What I mean by that is an ounce of gold is always going to be worth an ounce of gold. Doesn't matter what you measure it in. It's never going to change the fact that that's an ounce of gold. There's no other investment like that other than maybe real estate. Okay. Consistent returns. If you look at gold, consistently it's delivered. It's been around for 6,000 years. It outpaces inflation. And then I'm mimicking central banks. For those that don't know, central banks, especially the United States Central Bank, excuse me, they currently hold 80% of their reserves in gold. 80%, that's a lot. They're the number one owner and buyer of gold in the world. Okay, so when I look at that, I want to look at why are they doing that? I understand why they're doing that, and I want to do the same thing too. Now, with silver, I would buy silver for many of the same reasons. So I'm not going to write out all of the same ones, but I will go over some of the unique ones, right? So silver is something that I'll own because it has smaller denominations, right? Smaller denominations, meaning that I can get, an ounce of silver and that's going to be smaller than an ounce of gold as far as value is concerned. So if it actually came down to us bartering, I'm probably not going to barter, gold for like a loaf of bread or a gallon of gas. I could do that with silver though. So that's where I'm looking at denomination size. The other thing I'm looking at with silver is it has higher volatility. And I'm going to talk about this with gold and silver, but silver has higher volatility, which does mean it goes up and down more often and in higher swings. But those upward swings happen a lot sharper than gold. So an example of that is in 2020, if you look in March of 2020, silver came down to about $11 per ounce. Right now, it's up around $27 per ounce. So if I would have bought that $11 an ounce of silver, and that now is 27 bucks an ounce, I've more than doubled my money in a matter of months, right? So with silver, I can catch those swings. Now, I mostly buy gold. Now with gold, let me go ahead and clear my board. With gold and silver, they have something called a standard deviation. Okay, standard deviation. Now, what is a standard deviation? A standard deviation is a way that we can measure volatility. So a standard deviation, let's say that we have a graph and we have a midpoint line, right, for each of these asset classes. So gold and silver are both on a graph. They both have a midpoint line. Okay. So gold has a standard deviation of 15%. Okay. So that means that it could swing up or down 15%. Right. I'm going to make that a little cleaner for you guys. You could swing from the midpoint line. It could swing up or it could swing equally down 15%. So it could go up or down in either direction. So 15% means that any day it could go up or down by that much. Silver, on the other hand, has a standard deviation of about 25%. Okay. So silver could go up or down by 25% from that midpoint line. That's a lot more volatility, right? So for me, when I'm buying gold, I'm usually buying it as, again, a store of value, somewhere where I'm going to get stability and consistency. I typically borrow against my gold. So with that standard deviation of 15%, I can swallow that with gold. I don't mind having a 15% upswing or downswing, right? With silver, I buy less of it because it has a higher standard deviation, right? It's not going to store my value as well as gold. It's going to be a lot more up and down. If I'm borrowing against it, that means any given day I could have a margin call where they call my loan because that silver price dropped too much. With gold, there's a lot less chance of that happening. Now, again, silver has got a lot more common use value, barter value than gold does. So if that's your approach and that's your outlook, great, silver might be your asset. But if you're like me, where you're a little more institutional minded and you're looking at stacking up a store of wealth, maybe borrowing against it, using that to buy passive income producing assets, then gold is definitely the way to go. Now, if you're watching this and you've never bought gold and silver before, quick note, 2021 is probably the year you want to do this. Okay. Our dollar is being devalued like crazy. So 20% of all US dollars in existence since 1776. So the founding of our nation came into existence from October 2019 till now. 20% of all US dollars in existence since the founding of our country. When more dollars come into existence, it devalues the dollar. That dollar becomes worth less, and then prices of assets soar upward. Okay. The stock market is manipulated. The real estate market, same thing. So gold and silver is one of the only assets that's truly going to be untouched from the standpoint that, again, an ounce of gold is an ounce of gold. The government can't change that. Okay. It can go up in price because the dollar is worth less and it takes more dollars to buy the same gold, but they can't change what an ounce of gold is. So if you're interested in getting gold and silver, learning more about it,